Hello everyone, welcome to my channel HD ORION. We are studying accountancy for class 12th from T.S. Grewal's textbook Accounting for Partnership Firms, Chapter 1 Accounting for Partnership Firms Fundamentals. And in this video we will study interest on loan to the firm by partner and loan by the firm to partner. So let us see some questions from the textbook. Question number 10. Akhil and Bimal are partners sharing profits in the ratio of 3:2. Akhil gave loan to the firm of rupees 1 lakh on 1st October 2022. On the same date, the firm gave loan to Bimal of rupees 1 lakh. They do not have an agreement as to interest. Akhil had also given his personal property for firm's go down at a monthly rent of rupees 5,000. Firm earns profit of rupees 1,03,000 before above adjustments for the year ended 31st March 2023. Show the distribution of profit for the year. So let us see the explanation of this in the solution. So solution 10 we will see there are two partners Akhil and Bimal and their profit sharing ratio is 3:2. Now there are two types of loans discussed here. So Akhil has given a loan. On Akhil's loan, interest will be calculated for the period of loan, that is from 1st of October 2022 to 31st of March 2023. And Akhil has given a loan of rupees 1 lakh to the firm. So on such type of loan, the recommended rate of interest in Partnership Act is 6% per annum. So at the rate of 6% per annum, but only for the period the loan was provided, that is from 1st October to 31st of March, that is 6 months period. And the amount is rupees 3,000. And the other partner Bimal's loan, no interest will be charged. No interest will be charged from the partner by the firm because there is no agreement as to interest. Now, one more thing is there. Akhil had also given his personal property for firm's go down at a monthly rent of rupees 5,000. This is also a charge against profit. So, monthly rent to Akhil. How much? 5,000 rupees per month. So there are 12 months in a year. So rupees 60,000 will also be charged as an expense by the firm. So this amount and this amount both are expenses for the firm. So what is the profit? Firm's profit is rupees 1,03,000. And now out of this profit we have to deduct these two. So less interest on loan, that is 3,000 rupees, and also less rent, that is rupees 60,000. Now we get rupees 40,000 as the remaining profit, and this profit is distributable profit. Distributable profit which will be paid to the partners in the ratio, profit sharing ratio, that is 3:2. So how much will partner Akhil get? Akhil will get out of rupees 40,000. This is Akhil. So 3 divided by 5. 3 plus 2 is 5. And Bimal will receive out of 40,000 2/5. And the amount is rupees 24,000 for partner Akhil and rupees 16,000 for partner Bimal. This together is nothing but 40,000 only. So this is how the profit distribution will take place. So in total, Akhil will get interest on loan rupees 3,000 plus rent for his property used by the firm rupees 60,000 plus 24,000. So this is rupees 87,000, and the other partner Bimal is receiving only rupees 16,000. So this way, out of total profit which the firm has earned, they will receive this much amount. So when we talk about distributable profit, this is the distribution of the final distributable profit to the partners. But when we talk about that how much each partner has received, then the first partner has received 87,000 and the second partner has received rupees 16,000 out of the profit 1,03,000. So that is the solution. Now let us see question number 11. Nirmal and Pawan are partners sharing profits in the ratio of 3:2. The firm had given loan to Pawan of rupees 5 lakh on 1st April 2022. Interest was to be charged at the rate of 10% per annum. The firm took loan of rupees 2 lakh from Nirmal on 1st October 2022. Before giving effect to the above, the firm incurred a loss of rupees 10,000 for the year ended 31st March 2023. Determine the amount to be transferred to profit and loss account. So here we are having the firm has earned a loss of rupees 10,000. Despite this, we will have to charge interest on partner's loan. Fine. Because it is a charge against profit. It is not appropriation of profit. Interest on loan is not appropriation of profit. It is a charge against profit. Therefore, irrespective of profit or loss, we have to charge interest on such loan. Let us see the solution. So solution 11 we will see. Two partners are there, Nirmal and Pawan. And their profit sharing ratio is 3:2. Here there are two types of loan. One loan which the partner has given to the firm and the other loan which the firm has given to the partner. So the firm had given a loan to Pawan. Fine. Firm had given loan to Pawan. And there is an agreement in the partnership deed that 10% interest per annum will be charged. So on this loan, which is of rupees 2 lakh, fine, on this 2 lakh rupees loan, which Pawan has received from the firm, 10% interest for the whole year, that is, which is 5 lakh rupees, not 2 lakh, which is 5 lakh rupees. So 10% is how much? 50,000 rupees the firm will receive as interest. Fine, this is the interest the firm will receive. Whereas the other loan of rupees 2 lakh which the partner Nirmal has given to the firm, है ना? So that is of rupees 2 lakh. And on this 6% as recommended by Partnership Act, we have to charge interest. Fine, because there is no interest decided in partnership deed. So the rate of interest will be 6%, but this loan has been provided on 1st October. So from 1st October to 31st of March 2023, 6 months. So for 6 months, interest will be charged. So 2 lakh multiplied by rate multiplied by period for which the loan was provided by the partner to the firm, and it is 12,000 rupees. So this is an expense. It is a charge against. It is a charge against profit, and this is an income which the firm will receive from the partner. Fine. So there is a loss for the year. Loss for the year ending 31st March 2023. What is that loss? As given in the question, the loss is of rupees 10,000. So because it is a loss, I am putting a minus sign here. And this is an income which the firm will receive from the partner. So we will add this, add interest on loan. So 50,000 rupees is the interest which the firm is receiving from partner Pawan's loan. Fine. Whereas the partner has to pay interest on loan also. Interest on loan, because this 2 lakh rupees was provided by partner Nirmal to the firm. So Nirmal. And this is of rupees 12,000. So it is a charge against. So again it will be subtracted. So income is to be added and expense is to be subtracted. Now, when we add this, we get rupees. So here we have miscalculated. Actually, it is 6,000 rupees. Fine. 2 lakh multiplied by 6 multiplied by 6 divided by 1200 will be 6,000. So we have to correct. So it is 6,000 rupees. Now what we get? We get 34,000 as distributable profit. So out of this 34,000 which will be paid to the partners in the ratio 3:2, Nirmal will get 34,000 into 3, because this 3 represents Nirmal, divided by 5. And the other partner Pawan, out of 34,000, the remaining portion will go to Pawan. And the amount is rupees 20,400 and rupees 13,600. So this is how the profit is to be given to the partners. Let us see question number 12. Ankit, Bhanu and Charu are partners in a firm sharing profits and losses equally with capital of rupees 2,50,000 each. On 1st October 2022, Ankit and Bhanu gave loans of rupees 2,50,000 each to the firm, whereas Charu took a loan of rupees 1 lakh from the firm on the same date. It was agreed among the partners that Charu will be charged interest at the rate of 6% per annum. Interest on loan from partners was paid on 10th April 2023. The firm closes its books on 31st March 2023. 31st March every year. Pass the journal entries in the books of the firm for the year ended 31st March 2023. So let us see the journal entries and calculations for this question. So solution 12, we have to pass journal entries regarding interest on loan. Fine, there are two types of loan. One the partner has given to the firm, and the second which the firm has given to partner Charu. So let us see first the calculation and journal entry for the loan which partners have given to the firm. And who are these partners? Ankit and Bhanu. Ankit and Bhanu have given. So interest on loan. Interest on loan account will be debited and credited to the partner's loan, that is Ankit's loan account, and to Bhanu's loan account. So we will show the calculation here itself, and both have given the same amount, that is 2,50,000, and the recommended rate of interest is how much? As per the act, it is 6%, but for the period the loan was provided, and this loan is only for 6 months, because it is straightforward written in the question that on 1st of October 2022 they have provided. So when you calculate this, you will get an amount rupees 7,500, and the same is the thing for Bhanu, that is 7,500. So the firm has to pay, it is an expense, and it has to pay rupees 15,000 in total to both the partners, being interest charged on partner's loan. So it is an expense and therefore interest on loan account is debited. Okay. Now on the same date, that is 31st of March, the firm has to receive interest on Charu's loan. So Charu's loan account will be further debited. और भी ज़्यादा डेबिट हो जाएगा और क्रेडिट में हम लिखेंगे टू interest on Charu's loan. So it is an income and therefore this interest is credited. And the amount is how much? 1 lakh rupees is the loan amount. On this 6% per annum as written in the partnership deed is to be provided, and for the period, and this period is also 6 months, that is from 1st of October to 31st of March, and the amount is 3000 rupees. Being interest due from Charu. Now we will transfer this interest on loan to profit and loss account because it is a charge. Fine. So for this, profit and loss account will be debited on 31st of March. Profit and loss account will be debited 15,000 rupees to interest on loan. $15,000 being interest transferred. And Charu's interest will also be transferred to profit and loss account, right, on same date. So in this case, reverse entry will be there. Interest on Charu's loan account will be debited and closed by rupees 3000 and credited to profit and loss account because it is an income for the firm. So this is how the journal entries are to be made. Question number 13. Atul, Jetha and Tarak are partners sharing profits equally. Jetha was given loan by the firm on 1st July 2022 of rupees 6 lakh. Books are closed 31st March. On 31st March, what journal entries will be passed if A. Rate of interest is not agreed and B. Rate of interest to be charged is agreed at the rate of 10% per annum. Now, Jetha has received a loan from the firm of rupees 6 lakh. Now, on this, the Partnership Act doesn't recommend any rate of interest. Fine, and therefore, if there is no partnership deed stating the rate of interest on such loan, no interest will be charged for this because rate of interest is not agreed. Partnership deed doesn't carry any rate of interest for such loan and therefore no interest will be charged on point A. Whereas there is a partnership deed which states that on such type of loan 10% interest per annum is to be charged. So we will pass journal entries only for point B. So let us see the journal entries. So journal entries for solution 13B. So one of the partner Jetha has provided loan to the firm on 1st July 2022 and we have to pass journal entries for interest on such loan. Fine. So interest on loan account debited. Interest on Jetha's loan. Account debited to Jetha's loan. And 6 lakh is the amount of loan on which 10% interest is recommended or has been accepted in partnership deed, not as per Partnership Act, because there is a partnership deed which states that at least means 10% interest is to be paid on such loan. So we have to follow partnership deed, not Partnership Act. For the period the loan was provided, and the loan was provided on 1st July. So from July 22, 1st July 22 to 31st March 2023, it is 9 months. So July, August, September, October, November, December, January, February, March. So for 9 months we will charge. And the amount is 45,000 rupees. Paying interest on partner's loan. Now on the same date, 31st March, we will transfer it to profit and loss account because it is a charge against profit. Same amount, rupees 45,000, because it is the last day of the financial year, being amount transferred. So these are the journal entries. Now question number 14. Parul, Paresh and Rahul are partners in a firm. Firm gave loan to Rahul on 1st February 2022 of rupees 6 lakh. Interest was agreed to be charged at the rate of 6% per annum. Interest was paid by check up to February 2023 by Rahul on 5th March 2023 and balance was yet to be paid by him. Pass the journal entries for interest on loan to partner. So let us see the journal entries. So now in this question, looking at the answer, there is a correction in the question. This 1st February 2023 it has to be. Then only this answer will match. Fine. The loan is provided in the year 2022-23 and that also on 1st of February 2023. So this question, in this question we have to calculate interest only for 2 months, that is February and March 2023. Out of that 2 months, 1 month's interest is paid and the March interest is yet to be paid. Solution 14, 2023, 31st March. Fine. So because one of the partner, Rahul, has provided a loan to the firm on 1st February 2023. So from 1st February 2023 to 31st March 2023, we have to provide interest for 2 months. Fine. So interest on loan. Interest on loan account debited. So what is the amount of loan? It is 6 lakh. And a recommended rate of interest is 6%. As per deed also and as per act also. But when the loan has been provided on 1st of February, so only for 2 months we will charge interest. Okay, the firm will pay interest only for 2 months. So it will be 6,000 rupees. Out of this 6,000, the firm has paid interest for the month of February. Means out of 6 months, out of 2 months, 1 month is paid. So what, 3,000? If it is 2,000, if it is 6,000 for 2 months, it will be 3,000 for 1 month. 1 month. That is also February 23. Okay, and the remaining will be stated as to who is the person who has provided loan? Rahul. To Rahul's loan account. Interest for the month March. Because it is the end of the year and therefore we have to transfer this interest on loan to profit and loss account. debit side. So profit and loss account debited whole 6,000 on accrual basis to interest on loan. To interest on loan 6,000 because it belongs to the same year and same year's expenses are to be transferred to the profit and loss account whether it is paid or is accrued or outstanding, being interest transferred. So this interest was first debited and then it was credited, and this account is closed and only profit and loss account is opened here. Fine. So I hope that you have understood the concept very well and you have watched the full video. I will suggest you not to skip any part of the video because much details and the concepts are discussed and you should not miss this. If you like the video, please hit the like button, share it with your friends and do subscribe this channel. Thank you so much for watching this video.